Good morning, everybody. Good morning, Kay. Hope everyone's doing okay. How you doing, mate?
Good morning, Ryan. Good morning, everybody. Feels a little bit colder in this place since yesterday around 5-6 p.m., right?
Yeah, very upsetting, obviously, the situation and what's happened with Her Majesty, which you can see there on screen. Apparently an avid trader that's watching the BOE's Bailey make a mess of another NPC meeting there. But yeah, very unsettling for a lot of people here in the UK. She's been a constant in our lives, you know, not on the front pages every day or anything like that, but she's just been typifies old England, and it feels like a loss to a family member. So yeah, very upsetting for me, and very unsettling feeling today as well, as it is for a lot of people, like you said in the chat room, you yourself, who not even from these shores get the sentiment that she gave everybody.
Absolutely, absolutely. She's really, well, she's been in all of us lives for all of our lives, and she's always been an example of work ethics, fun, and yeah, strong hand, steady line, everything you can imagine. And I think it's just a loss for everybody.
Yeah, very much so, very much so. But as they say, for us, the show must go on, and so we will get stuck into it. What I will say just quickly regarding the situation here in the UK at the moment, we are now in a period of mourning. Was that me? Was that you?
Yeah, we've lost you there for a minute, for a second. And,
yeah,
and we lost the screen share as well. I hear you, we hear you, but we don't see your screen.
Okay. Yeah, I don't know what happened there. Okay, right. So I'll just repeat. Yeah, here in the UK, we are in a period of mourning. So just to update you on what's going to happen moving forward, because it is going to have some market impact. UK Parliament will be shut for the next 15 days, or will not sit for the next 15 days. Of course, barring any emergencies. So that means no policy business to be conducted there. It's to be confirmed, but some economic data may be postponed also, although we have heard that the ONS have cancelled some of their releases today. There were no big releases, I don't recall. So some of their other data that they generally release, but they will be running their full schedule over the next few days at least. The date to be decided on Her Majesty's funeral will be a public holiday, so obviously markets will be shut then, and obviously no data will be released there. So nothing majorly market sensitive there from the situation, but just to give you an update how some of the bits and pieces might change. If you see something on your calendar that you've been looking for and it doesn't appear, you likely know the reason why, but all this is to be decided as dates become more apparent. So right, let's get started.
We lost your sound again, Ryan.
Hello, you got me?
You're back.
Yeah, cool. Okay, so let's crack into the rest of it. Obviously, the ECB is going to be one of the main talking points today, and it's been an absolute flood of central bank stuff coming out. But before that, let's look at some of the data. To be honest, I can't remember what we had out yesterday. Did we have anything important out yesterday? I cannot recall. Let's give it that rubbish.
Only ECB and Powell. Yeah, we had like some.
Yeah, the initial jobless claims. I remember better. Looking a bit better. Yeah, it had been slipping a bit of late, but that's now turned around. So we'll see how that carries on for the jobs market. Might mean we've seen a bit of a blip where we saw for several weeks the 4-week average climbing quite a bit. Let's see if we can see that there. Let's let's look at that. So we saw this period from, pretty much from April, been climbing. Now it's back on the slide again, which is obviously good for the jobs market. Lower claims happening there, which potentially pushes Powell's timeline out for seeing a slow in demand in the jobs market out a bit further, because we know, despite what we're seeing from PMIs and the like in some sectors, jobs market is still very, very strong. Even though we saw the unemployment rate rising in the NFP, that was due to the participation rate rising, so bringing more people in, not necessarily because less people are getting jobs. And I think that is going to be become a potential theme for this, as I mentioned previously, that we could actually see the unemployment rate dropping significantly, not because the jobs market is bad, because more people are coming into it. So that isn't quite the effect Powell will be looking for, but whether the Fed would change their plans on that if they see, unemployment maybe up 4, 5, 6%. It could be a weird situation where the jobs market is actually still looking strong, but they change policy because of the unemployment rate. But that's all to be come out in a wash over the months ahead. As for the rest, yeah, we had Powell out pretty much in the middle of Lagarde. Not really anything massively, no game-changing comments there. Keeping to their path and whatnot. I know you were watching this while I was busy picking the bones out of Lagarde. Did you get anything from Powell that changes the situation, Kay?
He hasn't changed. He hasn't changed a word. He's just continuing. And as you say, I mean, they're watching the dual mandate, so they are going to look at price stability, which is not there for now. And it's not because we had one or two lower inflation prints that the job is done. They're willing to slow down the economy to rebalance the whole thing. So and he was pleasantly surprised by the participation rate. So we are going to have to look at both, the participation and the unemployment rate. If the unemployment rate starts to rise, it's not a really good thing, but that's the plan anyway, to rebalance demand. If it comes together with a rising participation rate, they are not going to be worried. So I don't think that we will see any mention of them getting worried about the unemployment rate unless we start to pick up, really percentage points for as long as the participation rate goes up with it. But we'll see how it all develops. He seems to, in a way, paint the Fed in a corner now, because they've all come out saying that we shouldn't expect any rate cuts in 2023. But is he now painting the Fed into the opposite corner, as where before he was too late on inflation? I don't know. Remains to be seen. But they seem to be very, very adamant to not start to cut rates before quite a while.
Yeah, and I think, even though the Fed may look through a rise in unemployment rate, if it's driven by the participation rate, that may not stop the market. There's still a big element that keeps wanting to trade the Fed pivot, and they're going to push it at every opportunity they get. So for us, that means good opportunity. If those guys want to do something like sell dollar and send yields lower on a rise in unemployment rate that the Fed's going to look forward to, we've got to trade. You fade those lot, as has been the case for the last few months. Excuse me. Right, so looking across into some other the data, China inflation a little bit softer year on year, a little bit soft all round on some of the numbers there. The inflation numbers, PPI down also year on year. I still think there's potentially, as I say, for a lot of these numbers and these economies, there is some potential skew still in there from obviously virus reactions and what's going on over there. But the data is the data, and that shows inflation is maybe edging down a bit over there. Looking at some of the other bits, bit of a quiet morning, so nothing really of too much note. We have got Canada jobs later. Usually it comes out same day as NFP, but we got a day off, so this jobs data may not have a big say in the markets, considering we had obviously the BOC this week, and they set their stall out as they're going to remain on the path of hikes until they get to where they want to be. But if we do get a volatile number, look for some movement there in dollar CAD later on. Now, as I mentioned, it has been a big day for central bank speakers, or a couple of days for central bank speakers. Obviously, ECB is top of this, but we have had others out. I'll go in reverse order from least importance to most important. Fed's Evans, a non-voter, he's open to a 50 or 75 at the September meeting. So sitting on the fence there, a bit like what we heard from Brainard, who's going to make her decision on the day, apparently. Bank of Canada's Rogers was out yesterday as well, the same shindig as Powell, saying that front loading is the best way to navigate a soft landing. So we get a lot of these front loading comments from central banks. So they're all stacking up the rates now to then perhaps sit on them or sit at high levels for a while before then taking the rate down to neutral or whatever neutral level they decide to set. So that features into the conversations we've been having. It's all about when they get to that terminal rate, how high rates will go before they're comfortable enough to ease off the gas pedal, pause, and then see what happens from there. S&P's Jordan was out yesterday as well. He said there's no decision on the SEP meeting, which is the 22nd of September. Their meetings are quarterly, so only 4 times a year for those guys. Next one is the 22nd. He was out with some weird comments as well that I'm not really sure what to make of it. He said the Swiss franc rise tends to help rather than hurt, which, given his comments of the last decade or so, is a complete 180. I think he's alluded to that previously, but again, it's just you know, he doesn't know what side of his mouth he wants to speak out of regarding the Swiss franc strength. But he said the really effective rate has been astoundingly stable, and they do look at, if you like, a basket or the Swiss franc in terms of across the FX complex. What else did he say? He had no comments on intervention, but won't rule anything out. And then another bit of a comment I'm not sure how to take. I need to do a bit of investigating, unless Kay can help out there. He said reserves for S&B payouts to the government are nearly exhausted, and you have to see what the second half of the year brings. So what do you make from that, Kay? Reserves for S&B payouts to Swiss governments are nearly exhausted. Does that mean they're going to be getting into the market and you know, increasing reserves?
Well, I mean, it's a bit of a weird statement. I'm to be honest, I missed that line, and I need to look up what it actually means. Okay, they need to pay the government, who then pays the local cantons, I reckon, in some returns. But yeah, I really don't know.
Yeah, I don't know if it means they need more Swiss francs, because obviously they would potentially pay their own government in their own currency. But
yeah, they probably investments,
income, you know, because they do run a big portfolio. So yeah, maybe they need to enter into the market and do some FX transactions at certain points.
Well, I don't know if they need to do FX transactions or equity transactions, because they have a portfolio in everything. They are like the speculators among central banks. So I don't really know where or how it's going to be. I need to look it up.
Yeah. So yeah, we'll keep an eye on that one and do a bit more digging. You know, it's only going to be worth something to us and potential FX moves if it's, you know, significant. If they suddenly go and sell, you know, $2 billion worth of US stocks and need to bring that money in, if they need to change any back to francs or whatever they need to do.
I think that's what the market understood, because Euro Swiss is a big figure lower this morning.
Yeah. So yeah, a strange comment. We'll keep an eye on it, look into it a bit more, and if we get anything, we'll obviously bring it to you. Now over to Japan. and a bit of messing around going on here. Obviously, we've seen dollar yen on the slippity slide. Fairly significant move there, down nearly 2 big figures, or has been down 2 big figures. Now, there were comments out from all the, let's call them the 3 amigos, from Matsuna, Suzuki, and now Kuroda overnight. And the other 2 bods were pretty much the same, watching with a sense of urgency, one-sided moves, blah, 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 ready to act. But Kuroda had a meeting with PM Kishida, and in one of the comments it was reported that he said, where is it? Yeah, a 1 to 2 yen move is a rapid move, or moves of 1 to 2 yen are rapid moves, which puts a number on what they see as excessive volatility, which is what we've been speaking about for weeks and weeks now. Now, that hit the market because 1 to 2 yen, or 1 to 2 big figures, if that's their boundary, that's much smaller than what we anticipate previously. But then that got corrected afterwards to 2 to 3 yen, which is more on what we've been saying. If you see 200 to 300 pip moves in a session, that's when they start to get a bit more interested in how volatile moves are. So as I say, it was reported originally as 1 to 2 yen, 1 to 2 big figures. That's still being bounced around in the market. It's obviously had effect in dollar yen particularly, but that comment wasn't corrected as 2 to 3 yen, which, as I say, is pretty much as what we know as the guidelines for when they get their ears up, if you like. So that needs to also be monitored. But for dollar yen, this is a bit of a strange, because we had those comments that it did hit the market, but we're not seeing any of the other yen pairs really following suit. So this is looking very much more a dollar move at the moment. We're obviously in euro dollar higher, cable higher, you name it, higher versus the dollar today. So it's a bit of a twofold thing in here, but yen crosses, and they may just be held up by the majors this time rather than leading. We are down, but as you can see, not to the same scale as dollar yen perhaps. You look across the board there, we're not off hugely compared to dollar yen. So it's while we do have these comments, today's looking a bit more USD led than anything else. And that's also borne out looking at dollar China, which has come off as well, which to me, suggests that, yes, while we were looking at one weakness as we were moving up, and that was indicated by Chinese officials and the PBOC, but perhaps a lot of it is been US dollar led as opposed to purely yuan led. I mean, overall, my thoughts just looking at markets today, it's a bit of a washing machine. I mean, we're seeing dollar yen off, but we've seen yields still pretty elevated. They were up, still running up into the 3.3s earlier today. So we're getting a bit of opposing moves, correlations a bit breaking down just for today. I think with the ECB, and I mentioned this yesterday on a post on the live blog and in the chat room, although the ECB are behind the curve, they're behind in the policy response, you can't underestimate their size as being a huge central bank. So even if we think that they're not doing as much as they should, just playing catch up behind the curve, whatever you like, still when they make a move, it's going to have an effect. It's going to close the gap with some of the smaller central banks, and the ECB is going to overweigh those types of currencies. So I used a example this morning. We know the RBNZ is potentially going to pause or stop hikes after the next 2. Well, that means if the ECB are now going to keep going into the end of the year and beyond, that gap is going to close in terms of monetary policy divergence. But as far as the ECB goes, obviously we've had a flood of ECB commenters out this morning, ECB heads. We've had Knott, Vasselay, Villeroy, Casimir, Muller. I've probably missed a couple, all coming out with the usual back patting. Haven't we done well? We're sending forceful signals, etc., to the market. So we are seeing a bit of a washing machine move regarding the euro and what's going on this morning. But overall, I come back to the old saying, are we going to break any new ground? Are we going to go anywhere new in euro dollar? You know, we're probably going to see 99 firm up pretty much now. Again, a support. We tried the tests, couldn't do it, couldn't hold a break. You know, no one should be under any surprises that we saw some sort of bounce. But what can it do from here? You know, at the moment, it can't even hold its head above 101. So if we're going to go somewhere, if something has really changed, then the price is going to move somewhere. Can it break out of the old ranges? Obviously, the big target for me and for a lot of people is this 103.40.60 area. But for now, as I say, I think what we're seeing today is a bit of washing machine repositioning. You know, we've had the ECB, we've got over that risk hump, we've got the Fed next, just a bit of jockeying around. But are we going to go anywhere new? The price will tell us so. Kay, what are your thoughts on the ECB and everything that's come out?
Yeah, I think the market was expecting it. The thing that the market may not have expected straight away was that she talked about 2 to 4 meetings more of hikes. Now we don't know how much those hikes will be. Everybody is speculating that the hikes will be, they could do again 75 or go 50s or things like that. But really what's happened yesterday is really the dollar correcting, right? We were on important levels the prior day. The first one was dollar yen stopping at 145. Then we had Aussie at 67. We had the cable on the 2020 low at 114, the euro dollar at 99. And we can go on, we can name a few more, and it's just a dollar correction, this one. Whether it's going to continue, I guess yields are telling us. I could see it come, although I've not been really short too many dollars. I was short dollar yen and long euro dollar at one stage, but I haven't ridden the whole ride. But yeah, fundamentally, I don't see much of a change yet. What's interesting, though, regarding the euro, for instance, is that there were all those LNG or whatever other ships on the ocean, and people see that as a little bit of a light at the end of the tunnel. So we may be in for a period. I think, if anything, I'd say euro still has a chance to do relatively well cross side, but against the dollar, I would say we're in a range. Same thing on the yen. The move down from 145. Obviously, there was a lot of jawboning, and there was a lot of room to correct as well on the dollar yen. Down to where it's going to go, why not revisit the 140 if we have further to go? But it also may already be enough here because yields are starting to hold up. And let's not forget, Bank of Japan is still having their YCC in place. And the rest of the yields, if you look around the globe, euro, sterling, whatever yields, they're all ramping higher. So I'm not sure whether the yen strength is viable on through the crosses. One thing that I've read this morning, there was an interesting article out of Reuters saying that some of the bigger funds are now starting to think Bank of Japan may be very close to a change in, or at least in wording or guidance, if not policy, because of the FX moves and because of the pressure that they have from the cabinet and from the MOF. And as we have already been saying as well, that Keidan Ren, that was a bit of an alarm going off when the biggest Japanese business lobby is starting to pressurize the government. And as a matter of fact, Kuroda may have said stuff, but I think the important thing there was that he was visiting the Prime Minister. He wasn't just in a meeting with the MOF and the FSA. He was in the Prime Minister's office last night. So that may be keeping the yen traders on their toes right now, and I've seen people now starting to get long yen. And I'm not only talking about our retail traders community. I'm talking about the people with the cash, and they are saying they are starting to look for a reversal at some point in the yen. Would it be only because there's a lot of room and because of the job?
Well, if these guys who continually call for the Bank of Japan to change their language, if they do it often enough, one day they may be right. When that will be remains to be seen. But yeah, I mean, going back to the ECB, and one of the key comments from the guard was that on the path of hikes. Now, she said there's likely to be fewer, I can't remember the exact comment, likely to be fewer than 5 more hikes, or hikes at the next 5 meetings. So we're looking at maybe 3 or 4 more hikes to come. So that can, in a sense, give us an idea of the numbers, what the ECB rates are going to get to potentially before they start pausing. So she actually said we will probably hike at less than 5 more meetings. But I think she said more than the next 2 or something like that, she said. So I did a little bit of maths on it. And at the top end, if they go 3 more 75s, that's going to put them at 4.25 for the main rate, 3% for the deposit rate, if they don't keep them in line. If they go 4, it's going to put the rate at 4.25. Now that's just on if they go 75s all the way. So at the very top, we've got either sort of 3.5 to 4.25, something like that. Now, are they going to go 75s all the way? It's pretty doubtful, I think. We may get 1 more, I think, and then they might ease it back. Depends on the data, as we know. But from yesterday, pick what the guard said, or what the ECB did. In my opinion, they did the least they should have done and the least they would have done yesterday. They did the 75. They said they're going to keep hiking, but kept everything else, not dovish, but unhawkish. Let's put it that way. So if we're looking at the top end of 3.5, 4.25%, something like that, that's the real top end. We're probably looking at somewhere around maybe, even 2.5%, 3%, 3.5% as potentially their terminal area. Now, as one of our guys, 5 Magics in our chat room, pointed out, was it the Euribor indications, Kay, that have never gone above 2.5% as where rates might go to. So the ECB could be looking at a bit higher than what a lot of the market has been pricing, but the market is still pretty much saying they're not going to go high at all. Now, if they do settle much lower, that's going to keep the big gap between the Fed and the ECB. What did you make of that comment on the amount of hikes and where rates might go, Kay?
All those calculations, I think, are a bit premature. Magic said the Euribor never priced above 2.5%. They might go a little bit above, but Villavois said again that the neutral rate is around 2% or even below. So I wouldn't, because it's the 2 to 5 meetings. This one, the one we had included, is it not included? I mean, she's a lawyer. She tries to lose her audience all the time. So I'm not really going to pay too much or trying to even make calculations to where the final rate could be. I never ever believe that ECB is going to go to 4%.
No,
probably not even 3.5. I just can't see it happen. There's too many differences in the countries to reach it there. I mean, people are going to be happy now in Europe because they are going to pay some on the reserves, but No, but it's just my personal view. I can't see it happen to go to 3.5%, 4%. I
Yeah.
can't, and I might
No,
be wrong.
I
Of
agree.
course, I have been wrong.
No, yeah, that's fine. But this is important for us because this is going to affect what the euro does. Because if the market starts thinking rates are going to get up to 3.5%, 4%, that maybe is going to be more positive because it's going to be a smaller gap with the Fed. That's potentially good support for the euro. If the market thinks that the ECB isn't going to get even to 2.5%, with the Fed still going at full steam, there's going to be still a big rate gap between the two. And if you're an investor looking for yield, even taking inflation into the question, you're going to go for the higher yields. And that's what happens in simple terms. So you're going to go to the dollar rather than the euro. So that's going to keep, obviously, the euro under pressure, and maybe we don't see it claw back some of the loss we've seen, over the last year or so. So it's important. While we can speculate, and mine and Kay's speculation may mean nothing in the real world, we need to understand the market speculating the same way is going to move the euro, and that's what's potentially going to give us the moves and the trends. As I say, if the market thinks the ECB are going to take rates to 4%, that's going to be supportive because it's going to be a smaller gap from the US. If they don't, we're not going to see the euro go very high, particularly while it's still got all the other fundamental problems around its neck. So that's why it's important just to know where something may or may not go, even if it doesn't happen, because the market uses that basis as well to position. Right, Kay, do you want to do your round the globe?
Yeah, sure. We're going to try to keep it fast today. Although a lot is moving, I'm just going to show those.
You say that every day.
Sorry?
You say that every day.
Yeah, no, it's going to be fast today. So the first thing is the euro, and I've taken the euro now this time because the differentials here are not the spreads are not moving much. Everything is moving together. So we had this big repricing on the euro versus dollar differentials. That in part explains the euro dollar side, and the reason also, one of the reasons why the euro then finally based in around the important 99 level on the euro dollar. This being said, we're in a global situation where it's happening on every single currency versus the US. If you look at the sterling, it's even ramped higher and faster than those euro versus dollar differentials. Part of these, and I wanted to share this the sterling as well. Part of this is due to Liz Truss funding needs, that the gilt yields have been absolutely ramping higher over the past couple of sessions. It's just come off a little bit this morning, but we've seen from August, it started already, from when it started actually to become relatively clear that Truss was having the lead over Sunak. This started to ramp higher, and then when she announced her plans, we did another like 25 BP, nearly 25 BP. So all yields are going higher, which explains why, even though the dollar yields are holding up, the dollar is not advancing anymore. And I think the rest is positioning. The rest is we are seeing here as well. Canada yields, Aussie yields, you name it. All the other yields are going higher again, which explains why the dollar is halting or not advancing further right now. So whether it's going to continue, I don't know. As I was saying to just earlier, we've got the bond markets lately have been repricing stuff like weather vanes. So now we are in the repricing of all the central banks catching up on the Federal Reserve. Now next leg is we are going to see what's going to happen with those interest rate differentials. I'm always keeping a very close eye on them because they are real drivers. And what we can see as well is that we may be a bit surprised to see that euro crosses are not really advancing much. That's because all the other yields are going higher as well. So we are a little bit of a dollar repricing, repositioning, and the rest of the crosses are a bit more difficult to trade. So here the metals, silver, coming into a pretty interesting zone in my opinion. We still haven't changed, but we managed the positions a little bit and see if we can find a bottom in the dollar for a little bit of a retracement. Still like it around this red line or around the 18 bucks. I think it's still looking pretty okay for as long as the dollar is not shooting higher. On gold, gold as well, we are testing this resistance here now around 1728. If it breaks, if we get a close above, we could be looking at levels back up into the mid 17s. And then a quick overrun. So that's what I meant. Very important levels on the euro dollar. Talked about this 99 as tried a couple of times below, didn't work. Market probably a bit too long dollars versus everything. And now we are here in the retracement. There's a bit of traffic 101 and a quarter, but it could be enough, depending on what the euro yields market does. But there is a risk that we are going to go back into the 101s, 102s before reassessing, and this one should be monitored as well. And that comes in around 101.70 right now. On the dollar yen, so as we have shown, 145 was a big level. Also looking at no, that's not what I wanted to show. Also looking, it was the 1618 of the 139, 130 decline, and now we are starting to we've broken back in the 143. It's a bit dangerous, and as I was saying, the market is starting to look for the other side now in the yen, because of the waffling and the jawboning of Japanese officials, but also saying that the dollar may have ran its course for a while. So we shouldn't be rolling out moves down to 141, and why not even back to come and retest the 139s? It's all possible. A lot will depend on what's happening between now and the Bank of Japan, and then of course what the Bank of Japan is doing, because I can lively see expectations ramping up into the Bank of Japan, hoping or thinking they may start finally to do something, and that may leave us room for big disappointment if ever they don't. But we still have nearly 2 weeks to go, so in the meantime we can start to trade in what I would call probably I'm not going to say tighter because right now it just dropped another 40 points, but in more like a rangy pattern rather than a one-sided market. Looking at the dollar CAD did exactly the same. Double top around we can even call it nearly a triple top, and coming back. You look at the Aussie dollar, same big level around the 60, 67, 66, 90 test and rebound, and we name it. The cable is the other example, 114 big level, lows of 2020, test just tagged just a little bit below, and then we see the rebound. So it's all about the dollar today. Whether it will continue, that remains to be seen. But for the time being, it's still remaining on the defensive, and especially dollar yen. Got the impression that there's a few models involved in this dollar yen now. they need to cut positions that they had running long. So watch out, there may be some more. Moving over to just a couple of crosses. EuroCAD linked to the oils. That I think shows us that the euro has not won its battle yet. We stopped around this 130, 160, 60, 70 again on the EuroCAD, and we're coming back down to 131, 130, 90 here today. And we can see it on quite a few crosses. They went higher, and then they failed again at levels where they may have they could have broken. Euro yen tried it on the ECB, went up like flying in a really fast way, but then completely reversed, and now we are back like nearly 2 big figures lower and back under this triple top of last time. So I think we can still call this a failure. As I said, it's a lot is going to have to do with the dollar today. Quick look at dollar CNH. Stopped right in front of the 7 mark. Well done, Ryan, for catching that short. I'm still looking at the other side, but like really slowly building in. Keeping a very close eye on what's going to go at 690. Going on at 690, and then one other one that was also on an important level was the $17.50 rand, and it also capped and it also reversed. So it's all about the dollar today. Yeah, back on the CAD now. Have a look on those CAD crosses on the over the Canadian Labour Report, because that it could get a little lively. This one I thought we might have been in a very short-term flag, but it's breaking below. So, but that's more due to the weight or the strength of the yen today than anything else. Yeah, keep an eye on this 109, 108. Yeah, 109, the figure for a starter. If ever it goes lower on a weak report, it could do another 85 to 130 points, perhaps to the downside. If in turn the Canadian Labour Report turns out to be better, we may be fine on our final way to go and test up in the 110s. And I'm leaving it there, Ryan.
Yep, no worries, mate. I see dollar yen's breaking down through 142 now, 141.68 trading. So keep an eye on that. We could see a bit of a snowball effect going on here, because everyone who took it up through 140 is going to be getting a bit antsy. That's probably going to be. Let me share my screen while I'm doing that.
Okay, I took it over. I was showing the dollar yen. Okay.
Oh, sorry, mate. I've got it.
Yeah.
I can't see it. Have you got it?
No, you have it. You have it.
Where is it? Is it gone?
No, you have it. You had it. Just take it.
There.
Yeah, there.
Yeah, cool. Yeah. Yeah, I think as you said, that 140 area is going to be a big significant. If we bust it, I think we're going to see a lot of people folding a bit more. So we could get a bit of a cascade through that area. But regarding cable, keep an eye on it, because there is still a volatility differential between cable and euro dollar. So, you know, cable's been absolutely spanked, as we know. It kept going even while euro dollar was holding around 99. So there is that additional volatility there, that cable could move much higher than euro dollar does. Not because everyone likes the pound all of a sudden, but just on that volatility basis. For that, I'm going to be keeping an eye on euro sterling. After the ECB, I did tap it up here for a short into 87. I didn't want to touch it right close to the ECB, but afterwards there was nothing coming from Lagarde that had me thinking they're super hawkish, so I got into a short there. Got a bit off yesterday in that initial move down to the here where I've got sorry, in this area, but I'm looking at 50s to try and work a bit more off of that. So that's my position there. The only other trade I've got on is I hit $1 up at the 6.99.20. I've taken some off down at 6.92.60 something, Looking for me personally, I'm looking for 691 for another slice. I want to see what happens if we get down to 690. Again, it could be a bit of a do or die level for that one there. Anyway, that's I've got nothing much more to add. It's been a busy week. Lots going on. Yesterday was a bit of a rocker for the old emotions. So I'm going to keep an eye on what's going on here. I think today we just need to see how it comes out, how the wash comes out. As I mentioned, the washing machine effect. I want to say thank you to everyone who gave us some testimonials yesterday. Much appreciated for that. Yeah, Arif, I've just answered you there on the UK thing and trust and whatnot. Yeah, all I can say from here is thank you very much for coming to the Flow Show as ever. I hope you have had a good week so far and continue to have a good day for the rest of the day. If we don't speak to you before, have a fantastic weekend. Stay safe. Look after your loved ones. Thank you to Kate and Stel, who's not here, but I'll wave to him on Skype. Have a great day. Have a great weekend. See you soon.
Have a great weekend.